Baidu Stock is one of the largest AI and technology companies and internet companies in China. Buying Baidu means you are buying the Google of China. The company generates 64% of its revenue from the ads it shows on its online net. The growth has been sluggish for the past 2 years and investors have promptly dumped their shares. The growing tensions between United States and China and the regulatory hurdles again led to the stock in a free fall. In this video, we will take a look at the fundamental and technical analysis of the Baidu stock and see if this is a good entry point in the stock or is there room to fall further. So please stay for the entire video so you get all the details. My name is Arshad Ahmed. I'm founder of DIYStockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes and please do your due diligence before making any investment decisions. So let's get started. First, we'll take a look at the Baidu products. The Baidu app allows users to use the search engine and consume information and services on the internet. This app is powered by the Baidu AI. There are 202 million daily active users on the platform. The company generates most of the revenue from ads shown on the Baidu app. This has been the cash cow for the company. The company is looking to move away from the online business model into a marketing cloud. Baidu Marketing Cloud platform allows businesses to generate websites easily, and it also has a CRM engine beneath. The companies can maintain their leads. The advertisers can show ads on the marketing cloud. In turn, Baidu will have a higher return on their investment and can charge higher for the ad. The company has generated 35% of its ad revenue from the marketing cloud. The marketing cloud business is a fast growing one. Baidu is also the pioneer in autonomous driving efforts in China. The company has about 199 autonomous driving licenses and has wide extensive geographic coverage compared to just 20 licenses for its nearest competitor. The company is partnering with Tier 1 automotive companies and OEMs to bring autonomous driving. The company is also invested in the electric vehicle technology by partnering with Geely Holdings, which is an automotive company. Now here are the economic advantages for the Baidu stock. Baidu is basically the Google of China and has a huge moat. It is also the largest internet and AI company in China. The stock is cheap on fundamentals. We will take a look at the fundamental analysis shortly. The AI cloud may turn out to be the biggest winner. Artificial intelligence is one of the disruptive trends of the future. The company has access to huge amounts of data using which it can train its AI engine, and the engine can get better and better every day and can generate huge revenue for the company. The biggest concern, of course, is the regulatory environment between United States and China. In my previous video, we have gone through the Alibaba stock technicals and fundamentals, and in that I have highlighted the regulatory hurdles that are facing Chinese stock companies in the United States. Chinese government is slapping fines. For example, Alibaba had a record fine of $2.75 billion last year due to the Ant Group IPO fiasco. The ride-hailing giant Didi has also been given notice by the Chinese cybersecurity officials, and the app has been deleted from the App Store in China. Also, the United States wants Chinese companies to turn in their financial statements, and failure to do so could result in delisting from the United States stock exchanges. Also, Baidu has intense competition from Tencent Holdings. It had invested in streaming businesses, but that has not turned out to be well. Baidu is looking to sell the streaming business, but it was not able to do so last year. Here's a look at the fundamental analysis of the Baidu stock. A market cap of $61 billion, 52-week range between $114 and $354. Current ratio of 2.86 and debt to equity ratio of 0.33. The current ratio is very healthy, which is current assets divided by current liabilities. Price to earnings of 8, price to sales of 3.5, price to book of 0.3. Fundamentally, this is a very cheap company and value stock. Return of assets of 25% and return on invested capital of 17%. This signifies a great business. Baidu has $25 billion of cash on the balance sheet and $9 billion of long-term debt. Unfortunately, the revenue growth has been stagnant. So this is by no means a growth company. Let's do a technical analysis for the Baidu stock. For the weekly chart, we are using a 9 EMA. The stock had its all-time high in February 2021 when it hit $354. Before February 2021, the 9 EMA has always acted as the support. The stock started falling after February 2021 and the 9 EMA has acted as the resistance. Each time the stock tried to breach the 9 EMA, it has always fallen down. The RSI has fallen, but there is still room to fall before it enters the oversold territory. The MACD has been negative. The 12 EMA is less than 26 EMA. The gap between the MACD and the signal line is closing, which may signal a price reverse trend. But this is too early to say. The same story repeats on the daily chart. We are using a 22 EMA on the daily chart, and the 22-day EMA has acted as the resistance for the stock. Each time the stock tries to break the 22 EMA, it falls down below it. The stock has been making low highs and low lows each time, which is a bearish pattern. The stock had a support at $172 level, but it has broken its support temporarily last week. The next support for the stock is at $140. So based on the technicals, this is definitely not a buy. Fundamentally, we look at that the company is great, very cheap on the fundamentals. But if you look at the revenue growth, the growth has been sluggish. The analysts expect a growth of 20% to 30% this year. Based on the technicals, the stock has been making low highs and low lows each time on the daily chart, which is bearish territory. So based on the fundamentals and technicals, we can say that this, instead of a value stock, it may turn into a value trap. It is better to skip Baidu at this moment because there are better options available in the stock market all the time. I hope you found the video informational. I release videos weekly on growth and technology stocks. So if you are new here, please hit the subscribe button and share and like this video, and I hope to see you in the next video. Thanks for watching.